Welcome back to another episode. Man, Tarek, happy Thanksgiving.
Happy Thanksgiving. Happy to be here.
Dude, I'm stoked to be here as well. I want to talk a little bit about how to get qualified. You know, we'll keep it light because Thanksgiving was yesterday.
Of course.
But we want to put out the content. So talk to me. What if I have a buyer that's ready right now, what do they need to do?
Yeah, so basically there's three things that we're really looking for, right? It's your debt to income ratio, which is probably the biggest factor, your down payment, and then your credit score, right? And obviously there's other things that factor in, like your work history and your longevity at work and all of that. But for the most part, we're looking at those three. Without a job, there's no debt to income ratio, so it's kind of a given. But I think the biggest thing that we struggle with is the debt to income ratio, especially in a high interest rate environment like we're in right now.
Yeah.
So I think that's the most crucial aspect and point of what we do. And essentially how that works is, let's just say for round numbers, if you're making $10,000 a month, then your all-in liabilities, including your proposed housing payment, cannot exceed $5,000. So I think that's huge because when interest rates were in the 2%, 3%, people were going after, $600,000 condos. You could be making $80,000 a year, and it was working. And now those prices have doubled, right, in terms of what we're looking at in your mortgage payment. So your income may have stayed the same, but your liabilities have increased with this proposed housing expense. So it's kicking people out. And that's why I think it's so important to have that communication and that consistency and checking on where that client is when interest rates go up. Right now, they've trickled down a bit with some good numbers that came out on inflation, but they can go back up, right? So it's moving, and this little bit actually does make the largest difference. So that's the biggest one. The best way to kind of think about it is if you're talking to a buyer and you realize, they have a lease, maybe they're driving a pretty nice car, and that's $1,000 a month in a lease. And if we're using that $10,000 example in income, then they only have $4,000 to work with. Let's say their credit card's at $500. Now we only have $3,500 to work with, right? So it's that threshold that we look at. And for the most part, you have to be under 50%. So that's arguably what we handle the most. And then the other things are down payment, but with programs out there with down payment assistance, there's always things that can be done with gift funds. And then your credit score, right? And that credit score is going to really dictate what program are we going to take, what's that interest rate going to be, what's the mortgage insurance premium going to be. So it factors into that, and ultimately that's always going to go back to the debt to income ratio.
I think that's an interesting topic. I want to rewind to really quickly is the mortgage insurance, because everybody thinks that it's going to be like thousands and thousands and thousands of dollars, but it's not really all the time.
No,
right?
it's not, and it ends up being, like, for example, on FHA it can go up to like 1%, right?
Yeah.
In traditional, like, conventional loans, you're looking at 0.18, 0.3, 0.2, kind of depends, and your credit score is going to dictate that. Another thing people don't realize also, and I think it gets people caught up a bunch, is oftentimes a lender will have a threshold on what your mortgage insurance premium is, and if you exceed a 45% debt to income ratio, you're allowed to be above 45 as long as you're under 50. But if you're above 45, that premium actually raises as well.
Oh,
so that's a weird game you got to play, because you might be pricing something out and you're seeing it and it works, and they're at like 47. Well, the lender might come back and be like, oh, well, their mortgage insurance isn't 130, it's actually 210 because they're above 45, and that's going to throw off your debt to income, right? So those are key things to look at, and those are things to know. That's why I think it's important for an agent to ask what the debt to income ratio is, also know how much room we're working with. But if you have that knowledge in the background, you can ask the question like, oh, are you factoring in a higher mortgage insurance premium? And they can be like, oh, we're good, or yeah, we are, and we're still pretty good.
Yeah.
Right?
So what's the advice for like an agent? They have a client. I have a client that I'm talking to at an open house, and my lender doesn't answer, but I need to figure out if they'd even be qualified. Like, what could I do as an agent?
Yeah, I think just basic like rapport questions, building rapport and kind of just knowing. I think understanding what we're going to look at is huge.
Yeah.
So you can answer those basic questions. I do think it's best practice to not get too into the weeds as an agent, because again, that's not like
I agree.
your specialty, and you don't want to give someone news that either isn't accurate or maybe swing them emotionally in a direction that isn't accurate. But I think just having the questions and being like, okay, oh, like, what do you do for work? And kind of like peeling the layers off, right? Like,
Yeah.
oh, I'm a head of sales. Okay, great. Like, how is our debt? I know like lenders have been like asking, like, are we looking good on debt? Like, oh, car payments, like stuff like that. No, I don't really have anything. Okay, cool. And you can kind of like qualify them slowly as like what you could say is a pre-qual, right?
Pre-qual.
Yeah.
Yeah.
And you can you can just peel it back, and then that's going to give you a little more confidence. So when you talk to the lender, you're like, hey, based on the info, I think this person's pretty good. Like, can you confirm? We got to move quickly. Like, this is what they said, and all that stuff. And then understanding the information. So I think what's smart in an agent is to prep them on the docs that they're going to need when you talk to them at the open house. So maybe you're like, oh, okay, great. Well, I'm going to connect you with my lender. Just know it's probably best to like make this process faster. Make sure you have 2 years of your W-2s. Make sure you have 1 month of pay stubs. Make sure you have 2 full months of bank statements. They want your ID, and they're going to want a copy of your social or a passport, right? If you can mentally prepare them for the stuff that we're going to ask for, then it's not so much of a hassle when we do talk to them, and then they're ready for it, right? And it's turning that around quicker.
Yeah, also because anytime anybody asks for a social security card, it's like, I don't know. But if it's part of the process, as the agent says, hey, look, they're going to ask for this is normal, then when the lender asks for it,
they're ready.
They feel more comfortable.
100%. And it doesn't feel, again, you're connecting someone that you barely know, let's say, unless it's someone you have a great rapport with, but it's open house, right, is the scenario we're in. You're connecting someone you don't know with someone you know, and then on top of it, the person is connecting now with 2 people that they don't really know that well, right? So I think that's the important point.
100%. So now with that being said, like you kind of have we kind of have steps here. Like, hey, look, person comes in, open house. I know I can ask these rapport building questions. I know I can figure out if they're even going to be able to qualify. Now, what's a process like if they're not ready to qualify yet? What could we do, or what do you like your like agents to do?
If the buyer isn't ready at the moment?
Yep.
I think what's important for both parties is to be involved. So obviously, let's assume that someone isn't ready this year. Like we're in the holidays now.
Yep.
So let's say we're looking at someone 6 months down the line. You want to connect them with the lender, and you want the lender to have a plan. And oftentimes what that means is we're going to take a full application, or at least I always try to take a full application. Again, let me peel back the layers. Let me see what the debt to income actually is. And then from there, we either devise a plan of, okay, over these next couple months, let's bring these liabilities down, or let's pay this off, or hey, your lease is approaching 10 months, right? Or like you're not 10 months, your car that you own is about to be paid off within 10 months. Like we can take that off, or your lease is ending in 3. Maybe if you can, like, if you have another car, don't get another car, right? Like we can tailor the plan.
Strategize.
Exactly. Strategize and tailor something that's actually attainable for them. But what's important is that the agent should still, even though you know they're not going to buy in 6 months, you should still be touching them, because within 6 months, they can meet another agent, right? And they can meet another lender. So it's, as long as it's pretty easy to be like, all right, we'll call you back in 6.
Yeah.
But I think if you just have a reminder of just reaching out, or hey, how's the conversation, or how'd it go with the lender? What are you guys doing? Oh, that's awesome. I heard that works. I had someone that did that and it worked. Kind of like giving them confidence that it's not 6 months literally comes around with the blink of an eye.
Well, yeah, and this is a relationship business, and the more people that you add to your funnel, the more people that you add into your database, and the more people that you're following up with and building relationships with, the more transactions you're going to do.
Completely.
It's very simple. And what you don't realize is you may meet someone right now that says 6 months, and then another person that says 3 months, and then another person that says 4 months, and then another person that says a year. And as you nurture those, that 3 months, that 4 months, that 6 months, exactly. And you have to consistently nurture those people. It's not, oh, you're buying in 6 months. Okay, I'll call you in 6 months.
Yeah.
You're 100% right. Like, hey, like you should be calling them and you should be reaching out to them. If they're buying in 6 months, you should be reaching out to them at least twice a month.
Yeah.
Right? And saying, hey, every other week, hey, how's everything going? Oh, hey, I was talking to Tarek about you the other day. He said you guys are on XYZ. How's that going with you? Hey, how's the job going? Blah, blah, blah. Hey, I know that your lease just ended right now. I know you guys are waiting on that. We're almost there, and so on and so forth. And that's what gets you to the finish line with these transactions.
Completely. And it builds trust, right? And it builds like you actually care.
Exactly. Which at the end of the day, like as an agent, that's our job, is to make sure that they're taken care of. Mm-hmm. And our job is to make sure that we have the fiduciary duty to make sure that they are taken care of as a client. So for us, we're doing our job by following up and touching base with them. For you, you're doing your job to get them ready. And then at the end of the day, we have a team effort and we close the deal.
Completely. Yeah,
I love it.
That's well said.
So with that being said, is there any other tips or tricks that you would say for people that are going to get qualified or anything like that?
I would say when we're in this environment, it's best to put as little amount of stress on you financially as you can. So like, I think we're programmed to obviously consistently want more, right? And I'll just use the car example because I see this so often. Like, let's say you're driving a Honda Civic and the lease is maturing right now and you're going to return it and you're like, what's my next car going to be? And there's another car that you want. Let's say it's a 3 Series, right? It's an upgrade. You want like a nicer car. The smarter people right now are making the decisions to stay reserved and to hold on to their cash and not put themselves in a position where they're paying, like, for example, interest rates go up, so does the money factor on leases, so does a car loan, like loans go up, right? All of those variable interest rate scenarios. So my advice is do your best effort to reel it in over this next like 2-year period, right? It's make those decisions now and be like, I'm going to think effectively and position myself to be in a better spot when this market changes. And the reason I say that is a lot of time we're taking on debt that is an extended period. This isn't credit card bills.
Yep.
Those interest rates are skyrocketing, right? So all of these big balance sheet items, like if we can limit them, if we can be more reserved, if we can like silence the ego a bit, I think you'll be in a better spot. And that's what I'm telling everyone. Like, hey, now isn't the time to like be quote unquote like balling out on like expenses. Now is the time to wait. We still don't know what's going to happen with a lot of companies. Like companies can lay people off. They're doing it right, left and right. So my advice is make the smarter decision. When the market's firing like last year, it's easy to be like, I'm going to buy this, I'm going to do that, I'm going to finance this. But now that that's changed, it's time to like take it back, like pull the reins a bit and position yourself to be better. So ultimately you're going to be in a much better spot when, if let's say you are waiting, you can fire it off. Or if you're not and you do buy, which it still is a great time to, you're going to have more money in your pocket, which is ultimately like what you want.
Yeah, exactly. And I say just avoid the lifestyle creep, right? Like, avoid it as much as possible. Get to the next step before you actually take the step on your expenses.
Completely.
Yeah,
Completely.
I love that. Tarek, thank you so much for coming on again. Look forward to having you again next week.
Yep.
And appreciate you.
Of course.
Where can they find you if they need to reach out to you?
You can find me, reach me directly, 714-553-0960, or on my Instagram, T_Othman, or at my email, Tarek@acglending.com.
Killer, bro. Thank you.
All right,
Appreciate
man.
you.
Of course.